Let's talk about the number 2 company by scale, Netcare. It has, you know what, Netcare's got a market capitalization of about 50 billion rand. So I'm thinking that I was wrong saying that Mediclinic has got a 200 billion market cap. It's probably closer to 100 after all of the reissue and all the rest of it, but we'll get back to you on that. As far as Netcare is concerned, though, it's a very close number 1 or number 2 in this country in terms of the number of facilities, hospitals, beds and so on. But remember, where Mediclinic went to Switzerland, Netcare had gone slightly earlier into the UK market, where it bought a bunch of hospitals under the General Healthcare Group label. And then it had a little bit of a problem because it got caught in the transition where there was the downturn in the global financial markets, and they got caught with a lot of debt associated with the physical facilities in the UK. But not to worry about that. That's old news. It's since kind of grown into that. The UK market remains a little bit soft, but it continues to trade very well here. It also owns things like Netcare 911 and the Medicross group of hospitals, which is for the middle income market. I did mention this earlier, 51.9 billion rands worth of market cap, PE of 20.43, dividend yield of 2.59%. Richard Friedland, remember the group has had good management always. Yes. Monty Sachs and what was his name? The other guy, Jackie Chevel.
I can't remember.
All top guys.
Yeah.
Yep.
Look, the share price hasn't nearly done as well as Mediclinic. They did battle in the UK, and when you read their latest set of results or their latest market update, South Africa, they say, stiff competition, as we discussed earlier on. They're growing their bed nights. I mean, they are getting growth on it. But of course, their big swing factor is the UK. Yep. And they haven't done, or more correctly, the UK healthcare market hasn't done that well just recently. And they state quite clearly in their latest disclosure to the market that even though the UK economy is looking a lot better, the private medical insurance isn't kicking in yet.
Yeah.
So they still say things are better in the UK, which almost by implication, if you read between the lines, they're not terribly good, they're just better than what they used to be.
And obviously whatever profits they're making would get converted into rands at the 21 to the pound sort of rate. That's fine, but the point is they haven't really seen much traction there.
They haven't seen much traction. So they're having and I mean, you can obviously be successful there, but that's a highly developed, highly competitive market.
And bringing it back to here, when you say they're doing fine here, they're delivering sort of low double-digit increases, 12, 13, 9, 10 kind of percent growth rate.
And they're getting 2-3% growth in patient bed nights.
Well, let's talk about the model here. So they developed 3 new big hospitals that I'm familiar with. The one is in the west of Johannesburg. I forget what it's called. Pinehaven, maybe. Then there's the Christian, what's the guy who developed the first heart? Barnard, yeah. Exactly.
Christian
so
Barnard.
In the Cape area, they took the Christian Barnard facility and they're building a massive new one next to the ICC in Cape Town. So when you come down the highway,
you can see it there,
you've got the new big facility. That's apparently going to be a state-of-the-art facility. So it's not that they aren't investing. I think they're investing like 2 billion rand.
They are investing a lot, but the problem is all the other companies are investing as well. So as we spoke about early on, we might be heading for slightly oversupply in the shorter term in South Africa.
Although, as we said before, we've been surprised by the number of people that have come into the private healthcare market.
There's a lot of people coming in.
Share chart. I like this thing where it appears behind us. So at a glance, you can see there what Wayne is referring to. Nice, strong share chart performance over the preceding years. And if you go back, it was at a lower price. So a very good performer over a decade. And just in this last period, a little bit of a sideways tracker. But I guess that's everything. It's the sense perhaps that the UK business isn't really firing on all cylinders.
Whenever you read companies, you've got to do a little bit, as I said earlier on, of reading between the lines. The moment guys talk about cost cutting and restructuring and repositioning, things aren't going terribly well.
As far as the UK is concerned, 5 years ago there was a real concern that they might end up owning these buildings which were basically worth less than the mortgage. Correct. But it sort of ground its way through that.
They went through a lot of problems with the properties and the refinancing of the properties, and that's probably the main reason why, certainly a year or two ago, why the share price came down.
Okay, good. As far as this one is concerned, though, we've got to go hot or not? What's your feeling?
I'll go hot on this one, actually. I don't think they've got the same traction.
Lack of momentum.
Same traction as Mediclinic.
I'm going to go hot. I like this space, and I think the team at Netcare continues to do a good job.